Hey guys, it's Jon Wanberg here with the Expert Advisors Group at Keller Williams, and I want to share with you some things that the media is not able to share with you, or at least they won't share with you, about the coronavirus and how that's going to affect the Central Florida real estate and our economy in general. So the first thing I want you to know is we're going to be in this new economy for a while. So this economy is here to stay for a while. It is not going to change anytime soon. So, this is something that's going to go on for a while, and it's not going to change probably within the next 6 months to 2 years. I would say it's going to be like the way that it's heading is going to continue to head that way for probably 6 months to 2 years. So we'll be in it for a while, okay? And I think that maybe like I said, 6 months to 2 years before we actually reach the bottom. I don't know. Nobody knows for sure when exactly that's going to be, but that's our thought at this point. Now, the second thing that I want to share with you is the fact that the markets will recover. Like, they will recover 100%. We have no doubt about that. And there's nothing, whenever we head into one of these changes in the economy and the economy begins to shift, people begin to think it's never going to come back. And I remember them saying, in 08, 09, 2010, it's never going to get to where it was in 2006. And sure enough, we got there and beyond that. And then they think it's never going to go back down as far as it did before. I was one saying that it'll never go back down as far. I wish it would, so I'd have an opportunity to buy all these properties. I missed out, And the thing is, here we are again heading into that same kind of thing. And so what I want you to understand is the markets will recover. The markets will recover. Okay. Both real estate and stocks, okay? And both are going to go down for a while. I don't think they're done going down yet, by the way, for sure not real estate. Real estate will follow stocks. So last time the stock market crashed first, began to recover in like 09, and the real estate continued down all the way till 2012. And so I believe it'll be the same. Again, stocks are going to lead the way, then real estate, and stocks are going to recover, and then real estate's going to recover. So it'll be just like that again. And then the third thing is, if you have a property that you need to sell, my belief is, and most economists' belief is, that the time to sell is exactly right now. And the reason is, sell now. Okay, that I'm going to just leave it at that. But the reason for that, there's a couple of reasons. One is, right now we still have strong comps in the last 30 to 40 days, so that the buyer's loans will appraise out and they'll be able to close at near the prices what they were 2, 3, 4 weeks ago. And the other thing is that if you decide to wait, like some people say, hey, I'm just going to wait out this craziness. And the problem is, if they do that, if they wait, they're likely to get a lower price. Okay, it's going to continue down, like I said, for 6 months to 2 years is my prediction. And I could be wrong on that, but that's my prediction for a lot of reasons, partially because of the people that are losing jobs and are not going to be able to afford mortgages. That takes a whole bunch of buyers out of the market. There's a lot of people that are afraid that try to sell, so there's a lot of inventory that comes into the market, and so it's going to continue to roll down for a while. And so if you do wait, you're going to get less money for the property. And as it goes down, your comps get worse, and the buyer's loans stop appraising out, and so forth. And so it becomes like a self-fulfilling prophecy and continues to go down. So the fourth thing that I want to talk to you about is, it's still a great time to buy. Okay? And I know that sounds contradictory. It's still a great time to buy. All right? And it's a great time because of interest rates. All right, interest rates are still super, super low. So like, I'm refinancing some of my properties, possibly even my own primary residence. And the reason is because rates are really, really great right now. And so if you're looking to buy like a owner-occupied primary residence, my advice is, when you see the deal in the neighborhood you want to be in, buy it. Like, if you wait, some investor's going to come steal that out from underneath you. You're waiting for a better deal. They're going to buy the property out from underneath you, and you're not going to be able to get into the neighborhood that you wanted to get into. And so don't, over $100 or $200 or $300 a month, don't be so picky. If you find the opportunity to buy the house in the neighborhood you want to live in, it's where your family's going to live, buy right now while the rates are still really low. It's still a great time to buy, and that part is not going to change that much. If it's an investment property that you're looking to buy, my advice would be wait 6 months to 2 years. So I wouldn't wait 2 years, because all throughout this time there's going to be great buying opportunities. But definitely, if you don't have to buy, or it's not a primary residence, you have the opportunity to wait a little while. And then the fifth thing that I want you to know is that we have a plan. We've done hundreds and hundreds and hundreds of short sales. We've helped people avoid foreclosure. We've helped people to do refinances. There's all kinds of options, tons and tons of options to help people to not lose their property or have their credit affected negatively. And my advice to you is reach out right away. So as soon as you see trouble on the horizon, reach out right away. And the reason is because the longer that you wait, when you wait on reaching out, your options begin to diminish, and you have less and less and less options. And what we want is you have lots of options, be able to choose what's right for you and right for your situation. And so that way we can, we have the opportunity to help you to do whatever it is that you need to do, and to preserve your credit and protect you and help you to stay in your home if that's what you're wanting to do. Now, one thing that I want to tell you too about this whole situation is there's no reason to fear. Like I have no fear going into this situation, and I want to share with you the reason why is because we already know how it's going to work out. We can look at history. We can see through history that markets go up and markets go down and markets go up. And so the fact that it's going down, we understand what's going on. Like don't be afraid of it. Just understand what's going on and start navigating through the craziness with a clear mind and a clear head, and understand it will definitely recover. It's going to take some time, but it definitely will recover. So if your expectation is it's going to recover in 2 or 3 months, then you're setting the wrong expectation, and you're going to be frustrated and disappointed and go through a whole separate grieving process later. My advice is don't set that expectation that it's just going to pop right out, because I believe that the effects on the economy are going to be long lasting. And so what my advice to you is just relax, see what's going on. Have a clear head and a clear mind as you're navigating your way through it. If you have any questions, reach out to us at any time. You can reach us at 352-577-5202. You can reach, I'll give you my cell phone on this thing. My cell phone is 352-978-8486. Feel free to reach out to me, and I'm happy to help you, figure out what the next step is. It's going to be an exciting time, but it's not going to be as terrible as everybody thinks. And there is going to be an end to it. So thanks for joining us. We'll talk to you soon.